Now, you might be looking at this thinking, oh my God, it's a downtrend, lower low, lower high, lower low. Bro, listen, we don't look at market structure. We don't use highs and lows. We don't use order clocks and none of that ICT garbage. We focus on what we call macro, a bit zoomed in there. We focus on the economics, because if you're seeing a downtrend, right, lower lows, lower highs, order blocks, supply zones, why would any of those zones actually work out if there's no economic reason for investors to actually want to distribute and sell that currency or get rid of that asset class? Doesn't make sense. So no wonder why your downtrends are losing, or you're trying to buy and it keeps fucking reversing on you, because you're not paying attention to the economics and the real fundamental drivers of price. So for me, that was where the bulk of my analysis actually came from. And that's what gives me absolute certainty of this market direction. And that's why, because obviously if we're looking at Euro USD, we're trading a dollar, right? That's why we've been shorting the dollar for such a long time now. Even when we had this break of structure to the upside and everyone was trying to buy out of here in these demand zones, there was no economic reason for buyers to step in the market. That was why we weren't buying, and we've been shorting the dollar. And based on obviously more data that continues to come out, we're going to remain with that narrative as of today. Obviously, data might come out differently. What earring? I think you should choose that earring. Right? Basically, obviously, if different economic data comes out, I can change my bias.